Back while soybeans pushed higher on Thursday. AgDay's Michelle Rook has more in Markets Now.
Well, a higher day in just about everything in the markets except for corn on Thursday. Alan Brugler with Brugler Marketing joining us. And Alan, let's talk about the corn market. It was down, made new lows for the move. What's the pressure from, and are we going to take out the September lows?
Well, I think the biggest problem is we've just got 2 billion bushels of ending stocks and not much hope of getting below that right now based on what we know today. Export sales had been running along at a nice clip relative to a year ago, but this week's sales come out this morning were not that great. So that was a little bit of a bearish influence. We are competitive with South America, but we're just not getting that much volume yet. Ethanol is pretty good, but again, today I think it's just it's harvest pressure. It's this. What are you going to do with that 14 to 15 billion bushel pile you've got sitting there?
Yeah.
And one answer is put it on sale until somebody buys it.
Conversely, soybeans were up. Is that this talk of China business, or maybe a little lower Brazilian estimates, or what?
I think it's a little both. There was some talk that China's expected imports for November and December would put them at 105 million tons for the year. That would be well above USDA's forecast. I'm not as bullish on that news simply because all of that incremental business was going to be Brazilian origin, not U.S. But, to the degree that China takes more beans, it does dry up the world supply a little bit. So I guess you can argue it from that standpoint. November beans and January beans did hold nicely. January held the $13 mark and has bounced off of that technically. The Brazilian weather, Argentine weather, it's really early, and USDA is going to be very cautious about making any changes there. But we do know that it's been on the dry side, and that could impact their final acreage a little bit.
Cattle had an impressive day on Thursday. Phil, the chart gap area closed above it. Can we keep going?
Well, I think so. Gaps are meant to be filled, and we broke in $6 after the cattle and feed report. And now we've taken that all back. We're still down quite a bit from the all-time highs that we set back in September, but it looks to me like the cattle cycle's intact. One thing that was kind of overlooked in the cattle and feed report is simply that we were still placing those heifers in the feedlots, which means we're not expanding. So that's still long-term bullish in terms of decreasing calf numbers and eventually steer numbers.
Alan Brugler joining us with Markets Now. We'll have more Ag Day coming up.
To talk to Alan about his ag market professional services, call Brugler Marketing and Management at 402-697-3623 or visit his website, www.bruglermarketing.com.